Can you see my screen?
Yes, perfect. Looks great.
Okay, cool. So OptyFi, our mission is to grow your decentralized assets on autopilot. So the statement is actually OptyFi enables passive users to simply and automatically maximize returns on DeFi and now NFT assets, given their risk preferences. So the example we like to give is that if DeFi NFT investing today is like the left-hand side, if you're an expert, it's a powerful engine and you can get a lot of performance. But with OptyFi, we're trying to build is a chauffeur-driven ride with an even more powerful engine. That's our goal. So we started on yield, and I'm not sure if any of you here are familiar with our yield product. That our beta vaults sort of went live at the end of Jan. So we started with yield, and now we are launching NFT Vaults. But we have an elaborate roadmap. We have conviction vaults.
You might be cutting up there.
I think there was some interference.
Yeah, I'll be muting them as they join. Sorry about that.
All right, no problem. So yeah, just a word on our optimized yield vaults. So we are a quant-driven platform. So we took a very different approach to everybody else when it came to yield. Everybody is trying to code, single one-off strategies. What we do is we look at the liquidity pools out there, and we basically say that liquidity pools actually the building blocks for strategies. In that, if you have a pool in which you can put token A and you get token B. If you put token B into another pool, now you have a two-step strategy. So actually the structure of DeFi and the structure of DeFi liquidity pools defines a universe of strategies for us. So we don't actually build one strategy at a time. We just add one pool to our protocol at a time. In fact, we add one protocol at a time, one adapter, and that exponentially increases the number of possible strategy combinations we look at. So that's the first step. So our smart contracts can run any strategy basically with a single line command. And then we have a machine learning statistical algorithm in the background that is looking at all these liquidity pools, looking at the estimated APYs, the volatility, and a bunch of other things, and predicting what is the best strategy. And then we take a subset of those strategies based on the user preference. So we have risk tolerance level for each vault, from stable to growth, aggressive, and degen, 4 categories. They basically define which subset of strategies apply, and then essentially our algorithm suggests the best strategies. We go into them, and so forth. So the whole idea is, in order to give the user like this kind of hands-free, build a powerful engine underneath. So we didn't just dumb down DeFi or make it just just more user-friendly. We tried to give the full power of DeFi, but at the same time, like a very simplified user experience. So now we are trying to bring that same approach into the NFT world. So what we're introducing are managed NFT vaults, where there's a governance structure. So this is very
Sorry, let me stop you there. I think there's some problem with your audio. Yeah, it keeps on cutting up, unfortunately. Now I can hear you better.
Okay. We'll give it one more try. Otherwise, I'll just hand it over to, I think Curtis is here. I'll just share it with Curtis and he can take over. Yeah. So I'll just give it one more attempt. Just to stop me as soon as it's choppy, because it might just be my internet connection, and I may not be able to do anything.
Okay.
So yeah, getting back to the topic, it's manage NFT vaults. We have a portfolio manager who would allocate.
Yeah, it's getting choppy again. It might be your connection.
Curtis, do you hear me? You're there?
Yeah. I'm just gonna go.
Yes.
I'm just gonna look for the link and I'll pull it up.
Yeah, sorry guys. Can't do anything about this connection.
No worries.
Curtis, I've also sent it to you via Slack as a PDF.
Okay, good. Yeah, it's just not loading on the. Oh, I think I have it now. You're still sharing your screen, Faisal. Okay, screen now. Okay, sorry, everybody. So, what Faisal was saying. So he just went through what is our yield product, and now what we wanted to talk about today mainly is the managed the NFT vaults that we're coming out with. So the NFT vaults are a series of smart contracts that allow a portfolio manager to specify which collections or which themes a strategist is able to purchase and sell on the smart contract's behalf. So the NFT vault is basically acting as similar to a closed-end fund in TradFi. And the DAO or portfolio manager can select strategists or experts to run the NFT vault under a predetermined theme or risk preference, etc. not letting me go to the next slide, actually. There we go. So there's 3 stages of the vault life cycle: the capital raise, the investing, and the distribution. So within the capital raise, we'll define a minimum and maximum target raise and a time limit. So say 30 days. And then at the end of the 30 days period, called capital raise deadline is hit, and then the investment phase starts. So this is when, similar to a closed-end fund, during the capital raise, you can deposit or withdraw your ETH. And then in an investment phase, it's locked up. Locked up meaning the ETH is locked in the vault for the purpose of investing. So it'll go and buy CryptoPunk or Bored Ape Yacht Club, Apes, or whatever NFTs that under the given mandate. And at that point, the only way to liquidate your vault tokens will be either with other or on the secondary market. So we're considering setting up, for example, a sushi vault token ETH LP pair so that there's some liquidity in the secondary. But during the investment phase, we'll follow strategies such as HODL, momentum. We can pick up NFTs that are identified as hot mints through quant strategies, value add, quant and ML, and sweeping the floor. So those are all just examples of strategies that can be run during or within a vault. And again, each vault has its own mandate. So it can specify, for example, 10%, like a max 10% exposure to any collection, or max 5% exposure to any one asset. It can define a theme. So it can be gaming, it can be metaverse land, it can etc. So that's how the vault is restricted to its mandate. And then what happens is the strategist is only actually allowed or enabled to purchase the assets that fit within the mandate. So if it's a punk vault and portfolio managers set the smart contract settings to only facilitate the buy and sell of CryptoPunks on Larva Labs exchange, then if the strategist goes to OpenSea and tries to buy a Bored Ape, it won't let him. So again, it's the strategist acting on behalf of the vault, which I think is a cool innovation that is differentiated from things that may be possible today. Like I see, for example, running a fund in this setting, you would have smart contracts that would facilitate all the transactions. It's much safer, more trustworthy, and you can get DAO involvement to make purchasing decisions, etc. So that's what the benefit of the architecture is. So like I said, every vault has a mandate. So the idea originally was to present thematic vaults. The first 2 vaults that are going to come out are Punk Vault and Bored Ape Yacht Club Vault. So these are like the blue chip, lower risk projects that kind of make sense to start with. After that, it goes into vaults we're thinking art, land, gaming, music, and conviction based. So within, for example, the gaming theme, that vault would only have exposure to obviously NFT gaming projects. And then there's also exposure limits defined in the mandate before a vault launches as well. So in this example mandate, themes 100%. So that means that this vault is able to allocate an exposure of up to 100% to any single theme. For example, it may be a gaming vault. Project 25%. That means that it can, let's say, it'll have a max exposure of 25% to any sandbox assets within gaming. So that includes land, assets, anything within the sandbox project. Asset 5%. That means that the biggest exposure to any given NFT, individual NFT, will be 5%. Maybe it's holding a piece of sandbox land that has high value. That value won't exceed 5% of the total value of the vault. And then strategist 20%. That's not an exposure limit. I think that's a bit of a typo. So the strategist, I think that's referring to the
allocation. You're right, Curtis. It's the allocation. It's not the exposure limit, but it's an allocation.
So how it works is, we can have multiple strategists actually under one single vault. And then your risk is also mitigated by the fact that we can predetermine the max allocation to each strategist. So in this case, at 20%, that implies there's 5 strategists or 5 people altogether authorized to make purchases and sales. And any one of them goes rogue, there's obviously only a max exposure of 20%. And even in that case, it's quite hard to go rogue for
Curtis, the idea was you're getting 5 different strategies. We're hoping none of them go rogue. But the idea is you're getting 5 differentiated strategies. So your strategies are diversified as well.
Okay, so that's 5 different strategies. Okay, yeah, so one strategist might have multiple strategies in this as well. So this is just a sneak peek of our UI, the design, what it looks like. So at the top, you can see there's the capital raise will end in 18 days. So that's what it would look like just after the vault launches. The capital raise phase for the first vault, I believe, is 30 days. And then once that capital raise phase ends, all user ETH that has been deposited is locked in. You can't withdraw or redeem anymore, but you can trade amongst each other in the secondary again. That would be for the investing phase, which also has a predetermined period. The Punk Vault's investing phase is going to be 12 months long. And then when that elapses, profit sharing phase begins. And in profit sharing phase, you'll be able to go withdraw or redeem your ETH, your vault tokens for ETH. And that figure will most likely have increased from your deposit based on what the price movements of CryptoPunks has been. One thing that we're trying to do with this product really that is a differentiator from something like NFTX or fractionalization is that when you go to NFTX, you're essentially getting beta to the market, right? So you're getting like a perfect correlation to the average price of punks, because the way NFTX's architecture is inherently means they're going to hold the floor price. So you're kind of getting, you're getting exposure to either the average or the floor price if you're assuming floor price equals average. At OptyFi, we're trying to get alpha, not beta. So we are doing quant strategies mainly to determine which CryptoPunks should be theoretically undervalued at current market price based on their traits compared against assets with comparable traits and what they've traded at in historical data. So we're going to try to, with the capital raised, pick out a punk that is theoretically undervalued in the market, and that will allow us to achieve a little bit of alpha. At the same time, since Punk Vault is the first vault that we're releasing, it's going to get some really good Opti rewards. So we're emitting Opti, our governance token, to the vault, and the APY, we tried to actually make like a defined benefit, assuming Opti's price, of course. So our Opti token isn't actually launched yet. That's coming up quite soon, but you can basically extrapolate the APY that you'll receive in a year from now based on what you think the future price of Opti will be. And those APY figures are really good. So not only are you getting exposure to a punk, but it is an alpha punk. And then on top of that, you're getting really good Opti reward token APY. So there's the base APY from the punk and reward APY while you're held in there. As I said, that we're going to start with the OG blue chips. So Vault 1, CryptoPunk, Vault 2, Bored Ape Yacht Club. They're non-floor value buys. So we're doing some quant research and analysis to try to find out which Bored Ape Yacht Club and which CryptoPunk are undervalued in the market. The capital raise, that's a typo. It's going to be 75 to 150 ETH, I believe, which will allow us to purchase a CryptoPunk. And the incentives are, like I said, you're able to extrapolate what the expected APY will be. And the expected APY is estimated between 20 and 150% APY. And that's in Opti only. So that doesn't even take into account the gains that you'd most likely be making on having exposure to the CryptoPunk itself. This is just the Opti token that we're distributing to the vault. So assuming Opti is around $100 million valuation in a year from now, which we think is quite conservative, you would expect a 20% to 30% APY, for example, depending on whether or not you made a referral. So you get a little bit of a boost in APY if you make a referral to the vault, and you're getting some really juicy APY regardless. And it looks like that's all we had today, but we wanted to show you some quant analysis example with David, who's the lead data scientist at OptyFi. David, are you in the crowd?
I'm here. I'll take over the screen.
Cool.
All right, guys. So as Curtis said, I'm the data scientist here at OptyFi, and I just want to show some of the analysis we're doing here on the CryptoPunks Vault especially. So can you guys see my screen?
Yeah, all good.
All right, so this is what the data looks like at the very beginning. We have, for each of these rows, it's a CryptoPunk, and it has a list of assets, and then the decile represents a relative price that it's been trading at historically. So if you're familiar with machine learning just at the basic level, everything up to decile would be your X, your features, and then your decile is the Y, the thing we're trying to predict, or cluster on in this case. So there's two parts to this. We want to use this data to provide tools to strategists so they can help make better decisions. So here we can plot the price distributions of different traits of punks. So this is the price distribution difference female and male punks. We see the same for the number of traits it has, the types of punks, everything except for human traits, very high values exclusively. That should be pretty easy to assume based on its rarity alone. And then for the different kinds of eyes, facial hair, we have these same kind of plots. So moving on, let's cluster these. And so I'll spare you the details. What we do is the algorithm finds a way to cluster punks based on their features. Ones with similar features are going to be trading similarly. So once we have a cluster, we want to look for an outlier in that cluster. So for example, so these are the clusters here. I think let's dig into number 43 here. So that's trading pretty high. We find the features that represent the cluster. It seems to be all female punks with light skin tone, and then only one feature. And then within that cluster, let's look for one that's trading below the rest. So they're all trading around 8 or 9th, or 8, 9, 10 decile, but this one's at 7 for some reason. So we figured it'd be more like the rest, so that's likely an undervalued punk. And then we can go backwards from this decile, this relative price. We'll go back based on current state of the market. Let's go to price for that. We have a current fair price is 160 ETH about. This isn't 100% accurate because the transaction data isn't up to date. I think this is a little old. And so that this is, we have, so from running this, we see that this punk 1315 is likely undervalued, and it should be trading at 160 ETH, and anything below that would likely be a good deal. We can also run this with a classification model, and when our models align, we have extra confidence on our decisions there. So for here, looking at punk 1315 again, it has been trading in the 7th decile, but this classification model predicts it should be trading a little higher. So that's likely undervalued, and then we have also a price that we could go in at. And this is punk 1315. I think that's all I have to show, unless we have questions, especially about the graphs. I kind of went over pretty quickly on them.
I think that's all we had at a high level. So yeah, if there's any questions, that'd be great. I think Faisal can try to answer, and if we can't hear him, I'll chime in. But I think one cool thing is, so like I said, the Punk Vault is coming soon. We've offered out some like whitelist spots to IC for that as well. So that's what like for is this Genesis launch vault. Since it's the Genesis launch, there's like really good Opti rewards being distributed to that Punk vault just to juicing up the incentive. So yeah, again, you're getting exposure to an alpha punk, as David just gave you an example of how we can find an alpha punk, plus really good Opti rewards alongside the exposure to the punk. One thing that's cool to think about in the longer term would be with this concept, we can spin up like co-branded vaults, some of our partners. So we think that Illiquid Capital sponsored vault would be really cool eventually. So how that would work is we could use, IC analysts could become strategists of the vaults, and like one of your portfolio manager, for example, you could define the theme of the vault or the collections that are whitelisted, and then you would post hopefully really high performance, as I've been seeing you guys post, and obviously users would be inclined to hop in the IC vault because I know you guys are capable of getting some super juicy APYs on your trades.
Definitely, that would be awesome. The whole concept that you guys have been explaining and the product that you guys have here, I think it's pretty great. Something that we haven't seen before. And I can see, what the main difference is between the vaults that you guys are building and fractionalization. Would you guys mind explaining the difference between, the NFT vaults that you guys are creating and the fractionalizations?
I can take a shot at it if you still hear me. If you can hear me, okay. If you don't, then I guess somebody else can. But yeah, fractionalization really is where you buy an asset and then you divide it amongst a group of people. And so the main benefit of that is you don't have to have money or the funds to actually buy the whole thing, right? Our vaults also give you diversification. So they give you fractionalization, that is true. So a person with $100 can own part of a punk, and they can gain from the appreciation. But they also get multiple punks, right? So that $100 could possibly include 3 punks. So now you have diversification. But I think the most important aspect is alpha. So we are trying to not be a index. So most of the fractionalization projects that I've seen are basically like an index type thing where they're taking a broad, sampling of, for example, punks, usually floors. I know NFTX does floors. So you do get price exposure to the floor of the punk, but we're trying to actually outperform. So we're trying to outperform that index. So we're trying to do better than the crypto punk.
Yeah, you're unfortunately starting to cut up again.
Yeah, we lost you, Faisal. Yeah, I'll just continue what he was saying though. So it's the alpha. So as David was just showing you with a little bit of quant analysis, we're trying to buy a punk that we deem undervalued, and then we can also buy and sell punks throughout the investment life cycle. So we may be able to buy more than one punk in the first place. We maybe sell that punk at a time that it's optimal to do so, and buy another if we see another one is at like an incredible price in the market for whatever reason, and so on. So that's just the punk vault one. So like the Genesis vault, and that's basically our product simplest version. Down the line, this diversification and alpha impact gets like magnified, because if let's say for a gaming vault, this allows a person to get broad exposure to NFT gaming as a theme. Maybe they're not a gamer, maybe they don't really understand gaming, or they're just a user that doesn't really have the time to go research NFTs and are a bit of a noob in the NFT space. Well, maybe they're still convinced that gaming is going to take off in NFTs because they keep hearing all their buddies and some news articles talking about it, and Sandbox and these games that are blowing up. So they simply want a diversified, broad exposure to the NFT gaming sector. That is what our NFT vault, gaming vault, will allow them to do, and that doesn't really exist in the marketplace today. So in that gaming vault, you're not, for example, getting a piece of a single NFT where you would be doing an NFT fractionalization. You're getting a claim on a set of a diversified portfolio of NFTs within the gaming theme. And that's from many different projects. There's many different assets. So you have the diversification effect, and also you have just the opportunity to get exposure to many maybe newer gaming projects that are less known, that involve a ton of research, and people like analysts at IC or strategists at OptyFi that look at this stuff all day long. The average user doesn't have that kind of a time or expertise to be able to make purchasing decisions like we do, and that's what we're trying to offer exposure to them for.
Awesome, sounds great. Well, I guess I had another question just from the members. The NFT market is known for its illiquidity. How were you guys planning on mitigating risk as much as possible, and dealing with that aspect of the market?
Yeah, so one way is certainly with just the mandates help in one sense. So defining things like max allocation to a project at 5%. This really helps because, of course, if you were in 40 or 50% allocated to a project that like flops or does poorly, and you get yourself in a liquidity crisis, essentially because you have 40-50% of the portfolio in that project. Since we have mandates specified where allocation can only be to a certain limit, this is, like, I would say, the primary mitigating factor of the liquidity risk. But then also we have different strategists and different strategies underlying a particular vault. So where there's no one single way to look at a thing, and there can be allocations, again, back to the mandates. So there can be maybe 20% max exposure to a single strategy as well. So there's a different ways where we're basically ensuring that your exposure to any single play is limited, and in that the liquidity risk is mitigated at least as much as possible. It can't be totally terminated, but I think that's how you could do a pretty good job at mitigating it.
Awesome, sounds good. I believe we have XXDS here as well from the team. He had a couple interesting questions that he wanted to bring up, so I'll give the floor to him.
Hey guys, what's going on? Thanks for taking the time to do this. Sorry, we had to reschedule the other day. I was just wondering, like, what you guys' thoughts around scalability of your product. I mean, I'm kind of having this issue myself where you might have a pile of money, but I feel like there's a limiting factor of how much money you can really invest in this space without then sort of being the market maker. I know you guys are sort of the first NFT vault is, I think, just for one CryptoPunk. I can't remember exactly how much ETH you guys are raising, so obviously that's not an issue. But I mean, I guess in terms of, you know, the roadmap in the future, how do you sort of see that playing out, or do you see that as an issue, or yeah, just some thoughts around that?
Yeah, I don't think I see it so much as an issue. I see like a bunch of different angles of opportunity for scaling this product line. So like one I mentioned was, for example, we could spin up like partner vaults with, like for example, IC could have a vault. Another example would be like we could partner with an NFT project. So let's say Lazy Lions. This allows maybe there could be a Lazy Lion Alpha Vault that we host where this is kind of mutually beneficial to the project and us, because right now, let's say Lazy Lion floor is somewhere around like 1.7 ETH. New people in retail that are just coming into the NFT space might not want to drop like 1.7 ETH. So a way that you can get involved in the community maybe just to buy some like Lazy Lion Vault tokens from us. So that's another way. There's basically a potential to partner with DAOs for vaults, potential to partner with like sophisticated investors or investor funds like IC for vaults. Are like partners that we currently have, DAOs that are kind of interested in spinning up a vault for their DAO and running it privately. I think there's just like a bunch of different ideas that you can think of. We're starting with theme, but as you said, like eventually, if let's say we have like 1,000 ETH in a vault, and then it becomes store is starting to become like a market maker, I think then it would just become a matter of like spreading out your exposures more and more and getting into like, let's say, broadening the basket of projects that we're exposed to in gaming. We can also set up in the short term mirror vaults on other chains, and in the longer term set up the vaults fully on other chains. So mirror vaults on other chains would be basically the mirrored vault tokens on Polygon, let's say, and then that would allow purchases and sales of Polygon NFTs as well. Maybe we could have a Polygon NFT vault that just gives you exposure to the top NFTs in Polygon. Same concept scales to Avalanche, to other chains. So yeah, I think like the ETH in market is massive in NFTs, but obviously the other chains are going to increase adoption as well moving forward. And then there's a bunch of different opportunities for, I guess, the underlying, like the strategy of the vault, what that vault is, who it's partnered with, and even what chain it's on. So I think definitely in like the mid to long term, I don't really see a scalability issue, and just in the sense of how many like kind of ideas come to my head with where the product can go.
Yeah, no, that makes sense. I guess the other thing, just another question I was thinking about is, are you guys going to, I assume you'll let the community members know which NFTs the fund purchases, right?
Yeah. So it's going to have like the NFTs that it'll purchase will inherently be according to the mandate that the community is aware of already. But then also just like on the vault page, so on the UI, it will be there, like we'll display the vaults that it currently holds. Or, I mean, the NFTs that it holds. So that'll be updating for everybody to see, basically.
I mean, the paranoid person in me, but do you see any issues of when you have to sell these assets and people know that you have to sell within a 30-day window or whatever your time period is? Or do you think that, I mean, the market's big enough, no one's really going to know that you guys have to divest of that asset, so they're not going to lowball you?
Well, you know, we're paranoid ourselves as well, so we've already like kind of thought of ways that we can mitigate that potential risk. Basically, we can have, in the worst case scenario, a fallback is we can have a second vault. So let's say for this punk vault, we can have a punk vault V2, which will buy the asset off ourselves, basically, in the worst case. But obviously, punks are super liquid. I really don't think that we're going to have that issue for punks. That wouldn't really make any sense. But for future vaults, I think I'm a little bit paranoid about that scenario as well. But yeah, we're thinking of ways that we can totally eliminate that risk. The worst case scenario, like I said, we would have a V2 of the vault that can purchase the asset at a fair price.
Yeah, that makes sense. Okay. AG, I'm not sure if you had any further questions or if anyone else in the community did.
I mean, mainly we had questions regarding the OptyFi token that you guys were coming out with, and yeah, just more information on that and its tokenomics and how you guys were planning on, you know, I understand that the token's meant to serve as an incentive, but how you guys were planning on growing that and, you know, adding some sort of making it sustainable.
Yeah. Faisal has like a lot of ideas recently on this. If Faisal, do you want to try talking and see? We'll see if your mic is messed up. I'll take a shot at it, but you're a lot better at this than me.
Yeah, I mean, I'll take a shot at it, but essentially, there's multiple ways the Opti token will have utility, and but the primary way, because we are essentially an asset management decentralized platform, so the primary way is to use it to incentivize the early users. But for example, in the future, if we want to vault on a specific topic or specific project, users may have to, or DAOs may have to stake Opti to vote for that, right? So those type of things the Opti token will do. The other thing is we're going to have token locks. That applies more on the yield side. So if users are willing to lock in their stable coins for longer, they can get double the yield and that type of thing. So the main idea is on the NFT side, incentivized so you can get some yield, which is kind of collateralized by solid NFTs behind it, and as well as you know, you can stake NFTs to essentially decide which vaults we launch. And if you're, let's say you're Lazy Lions, right, and you want to open a Lazy Lions vault, you'd have to stake some Opti in order to do that. And then I guess that serves your community, but it also serves us in terms of having you as a staker. So that's kind of the dynamics we see in the on the NFT side. With the one is to give yield to NFT investors, and the other one is to vault sponsors staking, which will, you know, basically flows capital into their project. So we almost think of it like a curve of the future. If you're familiar with Curve, different stable coins want to set up in Curve, and so they set up these bribes and they set up these.
Yeah, we unfortunately lost you again there, but I understood the overall idea, and yeah, it sounds great. Let me see if there's any more questions from the community, and yeah, we can ask those. All right, here I have a few. One second. One of the members was wondering why a 12-month horizon, since the NFT space can shift quickly and possibly not recover during, let's say, a 30-day liquidity window. Will there be an option to vote to extend it if such a situation presents itself?
Yeah, so to start, there is, if the vault token holders vote to extend the period, this is possible. So at the end of the 12 months, if maybe the market is just in a really bad situation, or for whatever reason it's a bad time to liquidate, then we can, as a community, vote to extend the investment deadline. And then maybe liquidating in a different period, or you can vote to extend, for example, the profit sharing deadline, so that we would have more than 30 days to liquidate.
We can shorten it too. We can also make it shorter, but we're trying to find a balance between vault holders and like the Opti holders, because we don't want vault holders to kind of take control like of everybody else's funds. So we want two levels of governance. Yeah.
And also, oh, sorry.
I was just saying that, but the 12 months in the first place, I guess, is a little bit arbitrary. It's just that 12 months seems logical, an understandable thing. But the concept is that this should be more of a long-term play anyways. So the strategy underlying could be like an arbitrage strategy where the strategist is buying and selling in quite high frequency, but the holders we're hoping have a long-term time horizon, and the investment life cycles will probably be around that 1 year mark, like by default, because this shouldn't be like a really short-term play in the mind of users. That then opens up a decent amount of risk. If you were to, let's say, have a 2-month investment life cycle in NFTs, I don't think that really makes any sense.
Yeah, I agree with you there. You guys are taking the proper approach. That was about it. We had another question regarding the 2% deposit fee on the ETH deposited by whichever user, and its structure fee.
Yeah, so the fees are going to be defined by each vault. And for example, if we were to do like an IC vault down the line, you guys would specify your fees. So I think you are doing like 4 and 45. Are you moving it to that? I saw the other day. But for the Punk vault, we're doing 2 and 10. So 2% management fee I think you'll be taking that on deposit, like you said, and then 10% performance fee. That's because I guess like the Punk vault doesn't require a massive amount of management expertise. It does in the sense that we're doing pretty sophisticated like quant analysis to try to pick our Punk. And hopefully that leads to some alpha and performance. So that's where the 10% performance fee comes in. But during more complicated vaults, such as a gaming vault down the line, or metaverse land vault, it would probably be more like 2 and 20 fees.
Right. Okay. Well, yeah. That was about it from the members. I think that you guys, it was a great presentation, and excited to see what you guys for the token launch and everything else that you guys develop.
Awesome! Thanks a lot for having us. Really appreciate the community. Big fan, and hope we can do a little bit of partnership in the long term with these NFT vaults.
Yeah, absolutely. Pretty excited. Thank you guys for
Thanks,
coming on.
guys.